U.S. nat gas futures are rising on Tuesday as traders engage in profit-taking and short covering following a notable four-day slump. This uptick is also driven by uncertainty regarding a tropical storm in the Gulf of Mexico, despite initial signals pointing to a bearish forecast. Natural gas dropped for the fourth consecutive session on Monday, pressured by robust production levels and enhanced flow capacity. The outlook for weather-driven demand remains mixed, further contributing to the bearish sentiment. The tropical system in the Gulf of Mexico is likely to bring cooling rains to Texas, reducing demand but potentially disrupting LNG exports. Meanwhile, in Europe, wholesale gas prices have climbed due to warmer weather, driving up power demand for cooling and heightened competition for LNG supplies. The benchmark front-month contract at the Dutch TTF hub increased to €34 per megawatt-hour. Market anxiety about supply and LNG availability persists, fueled by ongoing concerns over Russian gas flows and competition from Asia and the United States. Gazprom's gas exports to Europe via Ukraine remain stable at 42 million cubic meters, while Norwegian gas supply has slightly declined due to outages at the Vissund and Skarv fields. The total Norwegian export nominations dropped to 327 million cubic meters per day. Additionally, below normal wind power generation in Europe is boosting gas for power demand through the end of the week. From June 18 to 24, high pressure will dominate much of the southern and eastern U.S., pushing temperatures into the upper 80s to 100s. Cities such as Chicago and those along the East Coast will see highs in the mid-90s. In contrast, the northwest and northern plains will experience cooler temperatures and showers. Tropical rains in Texas will lead to cooler conditions there, impacting overall demand, which is projected to be high this week. Given strong production, increased flow capacity, and mixed weather demand, the short-term outlook for nat gas appears bearish. Rallies are likely to be sold at the resistance level of $2.95. If downside momentum strengthens, a retreat toward the longer-term support level of $2.80 seems plausible. Remember, storms hitting Florida typically result in power outages, which further dampens demand. Nevertheless, the main trend is upward, so keep an eye out for a technical recovery upon the initial test of the $2.80 support level. Please like and comment to support the channel. See you in the next one.